a sense of capital. Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Earnings Roundup. Very glad to have none of you in because we just start the first time on time, I would say, and I guess my audience is used that I always start a little bit late, and it's just regular that people joining during the stream more later on in the second half of it. However, guys, I'm very glad to can record this today and that you can watch it later on, because we make sure that what I've told during the past earnings live session 1 week ago roughly, that not everything like I mentioned it there stayed as it is, and I changed a little bit my opinion. So today for me the earnings roundups, earnings roundup session is especially important, guys. And so I won't not waste any time from your side and from my side, and just want to jump right in. But before we set the focus on the brief introduction of StoneCo, and of course covering quite comprehensively the earnings results of Q2 2024. A quick disclaimer as always, that in the upcoming minutes this will not be financial advice, consultation whatsoever, and there is no guarantee for the correctness of the provided data. And you can see the light is getting up more and more up. I need to make sure that as soon as the horizon is pushing the sun straight in my eyeballs to be done over here, because otherwise it will be extremely warm and stressful, I guess. But so guys, let's hurry. However, about what kind of company we'll talk today. Today we will talk about StoneCo, out of Brazil. Just a quick brief introduction for those of you who are new. I guess almost no one of those who follow me. But however, you can see here we're talking about a company which has basically three major product and service lines. Their legacy original business are their point of sales terminals. As you can see here, they are existing in more premium and less premium versions, covering credit cards, debit cards, QR codes, basically this kind of stuff. Then we have another part of the business, and that is basically software ERP solutions, smaller ones which they acquired during their existence in the past. Then there's a new business which is existing since 2020, and that is Links. This is as well ERP software solutions. They get established in different kind of stores, pharmacies for instance, public pharmacies, pizzeria stores, retail stores, shops, whatsoever. So even of course are running in some key account businesses. You can see here Nike, Pizza Creek, Giraffas. Actually I don't know Giraffas, but I guess it's quite popular in Latin America. So those are the two major drivers: point of sales terminals and ERP software solutions, which getting connected to each other. And the third one is providing financial service and banking service. So basically loans, credit business, credit itself, so access to money for their customers, and all of their customers are businesses. So StoneCo is 100% focused on B2B. That's how it is. That was already the introduction for today, and now we will jump into the actual stock. As I mentioned, I will waste any time for you today. I need to make sure to be quicker than the sunlight, and I guess I'm already starting to fail. I can see how it is coming more up and up. However, then maybe I need to lift up myself as well a little bit. Okay guys, let's share the PowerPoint slide deck for today. And here you can see my regular earnings metrics. You have seen that the latest call took place 14th of August, so roughly 5 days ago. It was the Q2 2024 call. Here you can see as well the major income pillars. And now here the classic metrics, which I always share during my live stream sessions, and my overall rating. And I always rate the different metrics, the different parameters in red, which is negative, yellow, which is neutral, and green, which is positive. And you can see here on the first glance, and I don't want to talk about the specific metrics in detail because actually I covered them quite comprehensively during the live earnings stream, and you can check this out as well if you like. However, you can see revenue and profit was mixed, revenue was a small miss. Wait, I can share here as well the results in a moment. And profit was quite fine, a small beat. And then the other numbers, the other parameters have been as well mixed, but overall more or less a neutral picture when we exclude the software business. Yeah? And so the overall rating for me is right now neutral, which is good for me because I always set up the requirements quite high for the stocks I'm a shareholder of, and if they're not providing strong beats, then it's for me not positive. Only if they provide strong beats, then it's positive. If they just provide comparatively tiny beats, yeah, and they stay in a certain level of covering the actual expectations, then it's just neutral. And if they miss, even if it's small misses, it's getting more into the negative direction. But I want to show you that this was not always the case. So here you can see my Excel sheet, which I utilized as well during the earnings live stream. And you can see on the first glance here, left is the left box, this is profit and this is revenue. And you can see here this small beat of 0.05 Brazilian real basically. So for me it was neutral. It was not a strong beat, especially not for a company which is that profit driven as StoneCo. But on the revenue side, you can see it's a clear miss. They clearly missed by 16 million Brazilian real. 14 million Brazilian real, as you can see here. So that was not convincing me, and I changed nothing. But now when we take a look, and maybe we take a look at the older version first of the really detailed parameters, you can see it right here that software was red. Okay, I didn't change this, but actually take a look and focus please the MSB take rate and the whole credit business, yeah, and the different parameters which are deployed behind. And look, this is how I rated it during the live stream, and this is how I'm rating it nowadays since I've did more research in a little bit. So one more time, compare it, take a look at the credit session. That is here the major differentiator, old, new. And one more time, take rate, old, new. Maybe start quickly on talking about the take rate. So take rate is basically the amount of money out of the revenue of the customers of StoneCo, so of the retail shops for instance, which getting transferred as a fee to StoneCo, to this core business, to this core payment business based on this point of sales terminals. And you can see I rated it first negative, because it was Q1 already 2.54% of the revenue, and now it was 2.54% as well. But actually, I forgot to keep in mind and to consider that 2.5% is comparably high. We will talk later about the 2024 guidance to get the feeling what was the target for 2024. But it was already high, and that's the reason why I rated it up from negative to neutral rating. And now we take a look at the credit numbers, and here it's basically the same. Yeah, I was a little bit disappointed because the jump from Q1 to Q2 on the absolute scale of customers in the credit sector wasn't that large compared to 1 quarter ago, for instance. And I just simply expected a little bit more. Maybe the bar was too high. And that's pretty much the same for all the other numbers. And here as well, I thought, oh man, the jump here to the default rate. Default rate is basically the loans where StoneCo expects they will miss them and they will not get paid, basically. And so as higher it is, as worse, it's getting more worse and worse, let's say it like this. And so from my perspective, I just focused too much the jump from 1 quarter to another and forgot that basically all of those numbers are very likely already high. And that is what I considered just after the live earnings stream last week on 14th of August. So that's the reason why I rated it up. And that's the reason why overall, first, I provided a negative setting, actually, a negative verdict, but then I shifted it to neutral. So actually I never changed my verdict my opinion that strongly since I'm doing all these live streams here. And I hope it will not happen again. I can't avoid it. Actually, it's part of the business, and sometimes you need a little bit more money to make your decision. However, after the call from StoneCo last week, I was really bearish. And now I'm not bullish, but I'm satisfied. And the price of the company itself, the price development since last week shows it the same. I mean, it rose by, increased by roughly, I think 5 to 10%. Yeah, so I'm not sharing this alone. But guys, one more time, I'm not changing my opinion here because of the stock price. That is for me absolutely irrelevant on the short-term perspective. But just because I had a little bit more time to cover the numbers, yeah. And now, guys, let's cover a little bit the numbers in detail, yeah. So what you can see here, the highlights of the press release, yeah, so of the documentation which was provided by the document at the day of the earnings call and the earnings release. And you can see there's only one really red highlight for me, so it's basically a low light, not a red light. But you can see that the software business, so one of these three pillars, is basically slowly but surely fading away. Yes, there was a higher focus by the management at the earnings call, and they created some kind of hope in terms of the software business, but in general it's really fading away since quarters. That's nothing new. But now for me, I wanted to fixate it one time with a separate highlight. You can see it here. It's just only 12% of the overall revenue which getting achieved by StoneCo is covered by software, yeah, in past quarter. That's really not a lot. That's really not a lot. Then year-on-year growth 0%, yeah, Q2 on Q2. Then Q2 on Q2, year-on-year growth minus 4%. When we talk about adjusted EBITDA out of the software business, minus 4%, so as well quite negative. And the margin itself, year-on-year, minus 1% adjusted EBITDA. So guys, one more time, really not good. Even there's some hope. This time the results doesn't show any strong potential or comeback situation, let's say like this. But now we can already go on and take a look at the more neutral highlights, and here we have it. And actually, for me it was very negative at the call, but I changed here my opinion honestly as well a little bit, and that is at the Investors Day last year, 2023, in the fourth quarter, StoneCo announced 2024 and 2027 midterm guidance, and it was very high. Some results they stated will quadruple, so 4 times in just 3-4 years, 3 years basically, 3-4 years. And so till Q1 2024 in the documentation, earnings documentation, it was always included, yeah. And this time the 2027 midterm guidance was completely excluded anymore. No focus at all on the documentation. I really thought on the first glance, okay guys, that's it. Maybe they think they will not achieve it anymore. It's not realistic anymore, and they slowly push it away. And that is what I didn't like at all, this kind of behavior. But I was wrong, because at the end in the call they focused it, and I will talk about a moment of it. But however, I rate it as neutral because at the first glance it was very negative. Now the management at the call after the press release was launched, they put a little bit more information to this aspect. Another neutral aspect for me is the MSMB, micro, small, and medium business up and cross-selling potential, and the procedure and the progress which takes place at the moment is just simply questionable. Yeah. So when you take a look at those numbers, the MSMB banking ARPAC year-on-year growth in Q2 is just 1.6%. Last quarter it was actually negative with 2%. This time it's at least up with 1.5% roughly, but it's quite low. And this is what I didn't like at all. But what I want to make sure is here to add the information. Maybe I can share quickly as well how it looks. The ARPAC rate, here it is. You can see it here, one more time. Oh, it was not minus 2%, it was minus 20%. So compared to this, it's way better than Q1 year-on-year growth with 1.6% compared to minus 20%. However, definitely not that strongly compelling on the first glance, but you need to as well to consider that they're rolling out their business and their credit business to different kind of consumer classes. And here they rolled it out quite strong in this quarter and or in the past quarters to the micro businesses, which don't have the solid, strong income streams and financial power. And so here those low budget point of sales terminals, which is called TON, T-O-N, getting more and more established. And through this kind of services, they can go as well for banking solutions and products. And when they are doing this, the result of it is quite simple, and it is that not only the actual payment volume per customer per quarter goes down, but as well the banking volume, so the ARPAC, the average revenue per active customer, gets down as well. So that's just a natural development, which first glance I didn't like at all, this negative development. But after doing more research and sleeping 1-2 nights over it, for me it was absolutely fine, and a neutral rating, from my perspective, is well deserved. And guys, we have one viewer here, so thank you very much for having you in, colleague. Feel free to use the chat if you like. And let's go on with the other highlights of the latest earnings results. And now we come already to the neutral and to the positive ones, Please all eyes on this one, shareholder value orientation. I mean, most of the time for a lot of us, let's say for those who are investing high focused on dividend income stocks, they are all about shareholder value orientation, because they think, okay, the company I'm invested in makes sure that part of the profit each year, each quarter, however they are pushing it out the money, they're getting part of it by receiving dividends. With companies I'm invested in, maybe you are as well, we taking focus on revenue growth, profit growth, so most of the time this kind of dividend streams are not existing. However, I like that Stone is taking care by buying back shares, and they rolled out in 2023, end of 2023, is quite strong repurchase share buyback program of 1 billion Brazilian real, which is basically roughly $180 million. And what they announced is that they almost fully executed it. They announced it in the press release at the end of this August. So I think in 5 days they mentioned 96% or something like this is covered, and so till end of the year for sure, let's say Q3 very likely, more or less 100% will be covered. And that is really, really nice. I mean, the result of it is that less shares are available, so the shares you are holding and me are holding are worth more, and so it's a little bit like a dividend. But the good thing is they have more part of their own company because they have a higher stake on shares, and so as well they're receiving higher stakes of profits, of cash flows, so it's adding a little bit more value to the company itself. So I like, basically I can live very well with share buyback programs as long as not 100% of it getting 1 quarter released on the same level as they purchased it before to their staff members, by a stock-based compensation. Then it's nonsense from my perspective. But how they manage it with a really, really high volume of $100 million for this comparatively small company with, I think, 5 billion EV, enterprise value, that's a good move. That's a good move for sure from my perspective. Then we started with the green ones. And that was actually a very, very, very surprising one. And who knows what will result out of this aspect. And that is the key accounts are coming back. So those key accounts, look guys, maybe I share quickly one more time the slide of links, and you can see here part of the key accounts, like really the big players, Volkswagen, Samsung, Nike, let's say those three for instance, these are key accounts, so really the large strong elephants in the room. And so those key accounts, this kind of key account business, yeah, is starting to recover slightly. You can see here, year on year total payment volume growth 19% in Q2, and 1 quarter ago it was minus 16%. Let me tell you something. This was not only last quarter the case. Maybe I share one more time the Excel sheet. I mark the part you need to take care of, but take a look at those, at this row. I go through it a little bit. You can see it like here. So this is the result of this quarter. So it was lower, then was a little bit higher. It was lower, it was lower. It was more or less stable, or even, as I mentioned, they lost, for instance, year over year, roughly 16% in TPV. So that is something really good. And next to it, the take rate, the key account take rate, which is of course in the MSMB business way higher. But however, it's finally start to get progress with 1.33%. You can see way higher than in the past. And yeah, really starting to accelerate. And I actually basically was not calculating anymore too heavily with income streams by key accounts, and that there's some potential existing. I always hope more for the software business, which my hope is a little bit gone, let's say it like this, but this key account business, maybe there's some potential left, let's say it like this, yeah. So for me, definitely a good one, even not the goodest, the most crucial ones, and those are those three here. So the market share gain in terms of MSMB active payment clients, so really they're getting more customers, and more customers for me is the clearest sign they're getting more bigger chunks of the overall cake, yeah. And last quarter, year-on-year growth was already 33%, and now we're talking about 30%. Yeah, it was a little bit lower, but keep in mind they're getting closer and closer to the peak. They have almost 4 million active payment clients right now. And they mentioned Q1 earnings call that the management mentioned actually by themselves that the peak is getting closer, and it will get more difficult, or will be more difficult to get more customers, yeah, to achieve higher customer base levels. And so for me, from 33%, which is a crazy large number basically, yeah, I mean it's a profit driven company, profit growth, not revenue growth. 33 is amazing, and 30% quarter later is still good. As soon as it's shrinking by just this small amounts of numbers, I'm 100% satisfied with it. Hey, my share is a little bit old. I hope you don't hear this, or it's not too annoying. Please let me know if that's the case. Then I think I need some oil and somehow adjust my chair for the future sessions. Okay, now we come to the two last highlights of the press release, and then we take care of the call. And as you can see here, and that is perfectly connecting to the first aspect. So they have a strong MSMB, micro small. It's not SS. This is how it should be. MSMB, micro, small, medium business active payment client base. That's already strong, and that is nice. That is very, very crucial. The good fundament of everything. But what I like even more is they're successfully transforming their payment clusters client base, so the legacy business, the payment business with this point of sale terminals, to banking clients, yeah. So those banking clients who have accounts by StoneCo, who get loans, or utilizing credits, this kind of stuff, working with credit cards, whatsoever, this kind of stuff, yeah. I mean, they have already access through their payment business, and now it's the question: how satisfied are those customers, and how good they can dig those synergies to make existing customers in one business, in the payment business, and transfer them as well to loyal customers in the banking business. And that works perfectly fine, because you can see here in Q1, 32% of the payment customers haven't been basically banking customers, 35%. And now 1 quarter later, it's already 30% left. Yeah, so 5% of their payment customers, they transferred it in 1 quarter to banking customers. And keep in mind, the payment customer base is growing still by 30%. So if it would not grow that strongly, maybe it would even be at 27% or something like this. So I like actually to see this number shrinking. Yes, the overall potential goes down a little bit, just transferring the payment customers to banking customers. But however, end of the story is a positive one. I guess customer base is satisfied, they are loyal, and they make happen to transfer them. That is what I really like. I like this KPI, this ratio between active payment and active banking customers very, very much. But for me actually, and that is something what I honestly, guys, please forgive me, that is what I didn't focus at all at the live earnings session, is the most crucial aspect right now. And that is why I mentioned, or why I called this today's stream like Warren Buffett and I have something in common. We both have been wrong, because Warren Buffett, as you may very likely know if you are a shareholder, he sold his full stack of Stone, I think, what was it, 2 quarters ago, I think, 1 or 2 quarters ago. And so he is not convinced by StoneCo that much, even if it's covering with some reasons like tax reduction or something like this. If he would be satisfied and convinced, Berkshire Hathaway would keep all StoneCo shares, I guess, or even increase the stack. However, he sold, and right after the live earnings session, I want to sell as well. Everyone who backed my stream, he knows it, I don't need to lie. And this one, this opinion I changed very dramatically by doing this. I already talked about that I changed strongly my thoughts about the credit rating, as you can see here. And I raised up the rating very strongly. But now I want to share quickly why that is the case. And I really didn't consider enough from my perspective the guidance. I didn't consider enough the guidance. And as you can see here, that's 2024 guidance, what they provided end of 2023, connected with this midterm 2027 guidance. And just compare those six KPIs, core KPIs, where they base on their guidance. And you can see MSMB, CTPV, so card total payment value, that's roughly at 50% of the target. Yeah, so that's okay. But now we start with a very positive one, client deposits. So really the debit card users and debit account users of StoneCo, how much money they put on their accounts of StoneCo. So basically, do they trust StoneCo as a banking service provider? Is the market getting recognizing the offers by StoneCo? That's a good sign for it. And you can see it's a very strong. Already now, right after at the end of the first half of the business year, they covered already the target for the full business year. And that's the same when we take a look at the credit portfolio. Yeah, I thought the Q1 to Q2 2024 jump is a little bit low, and the Q-on-Q growth a little bit low somehow, I'm not sure. But you can see here as well, their full year target is 0.8 billion plus Brazilian real, and they already achieved 0.7, so very, very positive. And MSMB take rate actually the same. There it was constant. Q1 already 2.54%, Q2 now as well 2.54%. But you can see it's already higher than the full year target. For 2 quarters, for the first quarter, it's running higher than the full year target. So all the others are as well by more or less 50%, as you can see here, of the target, and that's okay because we are the first half of the business year, end of the first half of the business year, and especially Q4 is seasonal wise, historical wise, a very strong quarter. So I guess they make it happen that the other 3 KPIs will be covered successfully as well. But however, the messages of this, that the MSMB take rate, the credit portfolio, and the client deposits, all of them are already almost covered the full year guidance at the mid of the year. And that is something what for me was just simply, after sleeping a few nights over it, was simply amazing. I didn't consider it enough during the call, mea culpa, but definitely something very, very positive. And because all of this, I rated it as neutral, And when we talk about the key question, I always have one key question. If I could get any information right now about the future of StoneCo, for me it would be the same question like last quarter, and that is how much horizontal market growth potential in Brazil is left. Yeah, so horizontal means how many client base is left. Yeah, and because they mentioned at the Q1 call that we're reaching the peak somehow sooner or later in terms of client growth, and I'm still interested when this point in time will take place, because that is for me really this peak, and then they need to make sure that really squeezing out everything out of their products, cross-selling, upselling, making more money with credit business, all of this stuff. But this is for me a very, very crucial number, really, what is going on with the overall client base in the future. Okay guys, that's it for the highlights of the press release and the overall metrics and StoneCo verdict. And now we take a look and focus on the call and what the management of StoneCo has communicated during the session. And you can see here, I mean, the overall impression was that the management communicated very open, very transparently, many details. I mean, that's not new. But what I really appreciated is they're even admitting some mistakes and errors which happened in the past. Like they told, okay, they do try and error how they roll out the credit products, for instance, and not everything was working perfect, and they still need to learn a little bit. And I personally just appreciate the combination of being sovereign in terms of communication, be very professional and serious, and add a lot of details, but on the other hand, being transparent and honest and fair, and admitting if something didn't work well. And this kind of balance, from my perspective, the management covered very, very well. Another point is that the overall mood of the call was quite positive. I mean, what I want to address with this is that the questions by the analysts, for instance, haven't been that negative, that critical, really somehow digging to the bone and asking really awkward questions and provocating somehow the management. That was not the case. Everyone seems quite satisfied. The management didn't do some aggressive stuff or something like this. Everything was quite in shape, and we talk really about good mood from my perspective. And what I liked actually is the software focus felt out way stronger than last quarter. Last quarter they didn't talk at all about software, more or less. This time in the introduction part by the management, by CEO and CFO, they already focused it. And I think if I remember correctly, even some analysts which joined the call asked questions as well in this direction. So that is what I liked. And now one slide about the highlights which resulted out of the call. So one is at the beginning, again, one aspect which is covered based on the software business. They are currently shifting from non-recurring to recurring income streams in terms of software, like really this SaaS, software as a system, software as a service business, So this classic CRM business like Salesforce, for instance. When we talk about Microsoft Windows Office solutions or Windows itself, you're not purchasing at the beginning one time and paying for the services, or paying initially something, or paying if you use more cloud volume, you're paying more money or whatsoever, this kind of stuff. That is not the case. Just really fixed income, standardized recurring revenue. That is what they set a focus on, and they mentioned. And that's very interesting as well. They mean on the short term it might have a negative impact on the revenue level, but on the mid and long term it can be very positive. So let's see if somehow, even though at the press release highlights I mentioned that it felt a little bit negative, maybe revenue can celebrate somehow, software can celebrate somehow a comeback. Now we take a look at the second position, and that was very crucial for me. They stated word for word, so a straight statement out of the call: we remain committed to our business plan and the targets established during our Investors Day. And for me that means Investors Day, there they announced as well the midterm guidance 2027. So that was my big concern, what is going on with the 2027 midterm guidance, because as I mentioned, it was not stated or integrated into the press release, but at the call they mentioned everything is fine with it. And so I guess 2027 midterm guidance everything is in shape here and as planned. What they mentioned as well is something not irrelevant, is because of some accounting changes and adjustments in this accounting approach, the actual revenue is 1% lower than it would be, let's say, in the past. Yeah, so regularly in the past, on the same accounting principles, it would be 10%, but because they adjusted a little bit the accounting principles, and I think it was about the membership at StoneCo, that had an effect of 1%, from 10% decreasing the revenue to 9%. Yeah, so as well something positive. Then here, interesting story. I mean, they try to enter a new customer audience, banking and payment customers, with bundle offers through the software business. Yeah, they use the software door where they already have a customer base and provide the same customers banking solutions, for instance. And they mentioned, and of course, payment solutions. And they mentioned that the cross-selling growth through software is basically double the size of the MSMB card total payment value. Yeah, so that is working very, very well. Somehow they're achieving larger customer base in terms of cross and upselling and creating momentum. That's great news that their approach to utilize the software business, even though the software business itself is not developing so positively, at least they're using it to position their upcoming stars in the banking business and the existing star with the payment business on a more vital way. Then what they've mentioned is that the reduction of loan loss provisions is based on more accurate expectations. So basically what they've stated, that they put in their bag, let's say it like this, in Q1 45 million Brazilian real, and in Q2 18 million Brazilian real. And what is the purpose of this? So basically for not collectible loans in the future. Yeah, they expected, okay, very likely we need 18 million Brazilian real because 18 million Brazilian real we can't collect. Yeah, and this expectation was way higher, and I think the analysts last quarter didn't like that at all, because it was 45 million Brazilian real, a quite high number, and now it was basically divided by 2. Yeah, so less than 20 million Brazilian real. That's good as well. And again, they mentioned because now they have a larger chunk of experience, and so they can provide more accurate expectations basically. And now we come to an aspect actually which I not 100% understand it. So if you can explain to me, please feel free to send me a DM or leave a comment, would be very thankful about it. But however, you need to know that PIX QR code, PIX is basically the national payment service, yeah, so you can pay with QR codes, yeah, and when you're doing this, you don't need a credit card as a customer of a restaurant, for instance, and so you don't need to pay any fees, for instance, to the credit card vendor. And so this QR code PIX system is cheaper than paying with credit cards for the customers of StoneCo, yeah. So which is good at the end, but on the other hand, yeah, they are not relying too much. So the customer basically they are not forced to use a point of sale terminal by StoneCo. These QR codes, at least I assume it work as well without a point of sales terminal. However, they mentioned that this PIX QR code demand, it's growing stronger than expected, way stronger, and that's actually the case. And they mentioned that it can have a negative impact on the overall guidance, and it can have a negative impact on the overall TPV, on the overall total payment value. And I expect it's the case because, again, basically when you are a shop owner, let's say a micro business, really small one, you can just organize your QR code and then everyone can come and pay, and you really don't need this point of sales terminal, and so you don't need to pay any fee or TPV or whatsoever to, for instance, StoneCo. So it has a negative X aspect, but overall the management state as well, it's a win-win situation. The margins are on the same level as soon as they use the solutions by StoneCo, and on the long term, they think that the demand for payment solutions, no matter if it's PIX or it's payment solutions by debit card or credit card, the demand will increase. Okay, a little bit neutral for me when I should rate this somehow, maybe because I'm not understanding it that well. I guess it's not, the management is not really welcoming this governmental PIX QR code payment option. Would be better if it's not existing, I assume, and everything gets paid by credit card or something like this, because then the dependence to the point of sales terminals by StoneCo for the shop owners, for the customers of StoneCo and their customers would be higher. However, what they mentioned as well, they will set a higher focus on the small medium business, so not anymore on the micro businesses. So step up the game as well, and maybe that will have as well an impact on, for instance, the RPAC, so the average revenue per active customer might be the case. Then they talked a little bit based on a question by analysts about the competition or the competitive environment of StoneCo. And they want to ask, okay, what is going on with the competition? Is it very strong whatsoever? And StoneCo itself made, at least for me, perfectly clear that the competitive environment of this business and of this company in Brazil is very, very stable and solid. And actually it's a little bit lower than in the past, because they mentioned there are not that many new players who jump into the game of point of sales terminals business and provide those devices, let's say it like this. That's not the case anymore. They mentioned it's quite stable right now. There are roughly 5 key players with them, so StoneCo and 4 others. And I guess StoneCo is very well positioned again when you combine this information with, for instance, this 30% year-on-year MSMB client growth, 30%, and almost 4 million customers over there. So that's very nice information from my perspective. They mentioned as well, based on a question by an analyst, is there potential for future share buyback programs? Because again, one more time, they showed here they executed already one, and they mentioned the management of StoneCo stated, yeah, it's definitely a potential. There's no quick no or yes or something like this, but they need to keep in mind that there are other new business segments which require as well cash. And so they need to make sure that not running out of financial power. But here as well, I want to quickly share my screen and share the cash generation sheet here out of the latest press release. And you can see, I mean, at first glance you think, oh, this jump was quite a small one with just 0.2%. But on the other hand, 0.2 billion Brazilian real, or even just 1.12, or just 120 million Brazilian real, sorry for this. So last quarter 5.1 billion, and this quarter 5.3 billion cash. And so here you can see it. I mean, they invested those roughly 180 million US dollars or 1 billion Brazilian real into buying back those shares, and it's executed at the end of August more or less, and it has a reason. And I guess when we take a look in Q4 the net cash position, because in Q3 again million of August they will invest more and more money. It's a big chunk of it, or almost 700 or more than 700 million Brazilian real. So I think afterwards from Q4 on, really they will have more and more money, and if they can't reinvest it efficiently and successfully in the business segments, I'm quite convinced that they will roll out further share buyback programs as long as the company is cheap. And I guess the reason why they executed that quickly, their share buyback program, I guess for them, based on their perspective, it is cheap, yeah. So that is something as well very positive. Let's go on with the informations we gathered out of the earnings call, and we are at the both last ones. And the management stated very good news from my perspective. As mentioned, 6 KPIs are existing when we talk about the 2024 full year guidance. As you can see here, 6 parameters. 3 of them are already covered. clients' deposits, the credit portfolio, and take rate, and the other three, adjusted net income, adjusted administrative expenses, and MSMB CTPV. Those three, they mentioned basically it's very, very realistic that they will cover it, despite the aspect, or considering as well the aspect that they're expecting headwind, so negative impact by increased interest rates by the Selig bank, basically the national bank. Yeah, so I mean, we talk when the Fed or in Europe, we're talking about lowering the interest rates, and in Brazil it's the opposite direction. So they will very likely increase it in the second half of the ongoing business year. The last earnings call aspect I want to focus on is a very tiny one, but as you know, in May this year, right in the period when they announced their Q1 2024 results, flood took place in the western part of Brazil, and there as well the price decreased a little bit, tanked a little bit because of this aspect. And they already mentioned last quarter Q1 that they expect not that heavy impact on their TPV, for instance, and now they mentioned it had roughly an impact of 150 million Brazilian real, or 27 million US dollars, which is comparably tiny. And what I like more is not just the small number. What I like about it is actually that the management seems they have knowledge and competence about what they are doing. Yeah, they quickly made sure in the call, even though this event was a very new one with this flood, and it was very present in the media in this area, and as well even in Germany, for instance. But they really made sure to move any concerns and told something. I think it was like 5% maximum effect or something like this, and I think it's even lower right now. So that is a great information. Okay, guys, that's it when we talk about setting a focus about the highlights based on the call. We talked already about the highlights based on the press release, and that I adjusted a little bit my rating about the overall results from negative to neutral. Yeah, so again, one more time, sorry for this, guys. Now, after a quick sip out of my glass, I give you a personal verdict how I will behave and act in this situation. So you can see here my famous valuation table. And you can see here an old version based on the last day of July, 31st of July 2024, and the new one just when you set the focus on StoneCo. And when you compare it, yeah, just take a look at this row with StoneCo. The expected sales growth 2024-2025, from my perspective, didn't change heavily. Yeah, by 1% down a little bit. Yeah, maybe because as well of the increase of the interest rate. Let's see. But the demand itself doesn't look that good, but on the other hand, not bad, because at the end we're talking about a profit growth company, yeah, not a revenue growth company. That's not the core identity of this company. Then EV sales has changed slightly as well, increased as well, so a little bit more negative than before, as you can see here. Before it was a little bit lower than a 2 ratio, so EV to sales was 2. A little bit lower than 2, now it's 2. Didn't change as well that heavily. The price earnings, not big impact on it. Yeah, but why then the fair price multiplicator lowered? Yeah, so it's before I saw more upside, and now I see a little bit less upside for the stock. And the major reasons for this, because after those results, the stock price surged, so increased by 5 to 10%. Yeah, and still today it's increasing. So of course, even though the overall expectations in terms of their performance don't change that heavily, if the stock price is changing in this regard, then the valuation is getting lower, you know, and the stock getting more expensive. And that just took place in the past days, in the first 2 weeks basically of August. So I mean, it stays at my least favorite ranked company, positioned on 6 of 6 stocks I'm a shareholder of. As you can see here, the stocks I'm a shareholder of, these are just benchmarks here with Nvidia and PayPal. And so I personally, I think it's more or less fairly priced. I think not that it is a bargain. Yes, still there's a lot of room for improvement, and especially on the profit side, and my valuation takes a higher focus on the revenue growth. And because StoneCo is not creating that much revenue growth, it's not appreciating that much, let's say like this, and adding so much plus points in it. Yeah, so that's a little bit the aspect when we talk about my valuation, because I'm a revenue growth focused investor. But if you are a profit growth focused investor, yeah, and you like maybe as well that still has a quite good chunk of sales growth each year with 11% expected for 2024, 2025, which is not that bad when we talk about a ratio of 9, when we talk about price and earnings, then I think it might be a good deal for someone who's not invested yet. And maybe it's still a good chance to invest, because again, when we talk about the 2027 midterm guidance, and the management stated everything is green and realistic in this regard, they will quadruple their net income within 3.5 years, 4 years. There's strong potential, no doubt about it. But however, I already invested this year, I think 2 times at least. I think I invested last month, and I think 1 or 2 months ago. So I'm fine with my position. I'm fine with it. I don't think it's the biggest bargain at the moment. But again, if you are not invested, might not be the worst time to invest. However, put it on the watch list, I think, is as well a good idea, guys. Yeah. And last but not least, now we take a look at the outlook for this week, because I was quite motivated in the weekend and ambitioned to do more streams before next week I go on vacation for a week. And so tomorrow I will cover as well the earnings roundup of Grab, basically. Grab, we covered the results live as well during the past week. And so I want to make sure, because there I provided as well a quite negative rating, I want to make sure that I can stick to this rating. Actually, I will stick to it, but some details has changed a little bit, so very interesting. And I will cover as well, of course, the results of the earnings call, yeah, which I screened later on in the past days. So tomorrow, Grab at 11:30 a.m. ET or 5:30 p.m. CEST, no matter where you position it at. Then on Wednesday, it's getting very interesting when we talk about Alfen, the electrical hardware supplier, substations, EV chargers, and energy storage systems out of the Netherlands. This stock is tanking like no other stock in my portfolio. It's really not that nice to be a shareholder of at the moment. However, as you can see here, there is a stick with some stars around it, and a hat with a bunny with a rabbit inside. Yeah, so maybe there is a magic trick left. Maybe all the magic is not gone yet. Let's see. Maybe there's a surprise. Even though that's my smallest position, and even though I thought a few times about investing more money right now, because the stock price is quite low compared to the to the all-time high, or compared to the price, let's say 3 months ago. I think that might be very interesting, is basically interesting. However, I will not invest before the earnings of Wednesday. Yeah, I will definitely leave out my hands of my portfolio in terms of Alfen. However, might be very interesting, might be very emotional. Maybe there's a surprise, maybe the complete different will be the case, and they will disappoint one more time after they already adjusted their full year guidance, I think 1.5 months ago. So it could be interesting no matter if you invest in Alfen or not. And last but not least, I will cover the stock news. Stock news, I will do an episode each week from September on, very likely. I think every Thursday at 11:30 a.m. ET or 5:30 p.m. CEST. I will do stock news episodes. And what kind of news I will cover, because I see 2 of you are now live here in the audience, and I want to make sure I credit that you stayed patient till this point in time. I will share one news which actually is, from my side, a very relevant one, as long as you are interested to invest money in new or StoneCo, or if you are already a shareholder. And guys, let me screen it. But however, there are way more news which I will talk about on Thursday, so make sure you join. However, I will show you quickly this news I want to talk about right now. And I I crossed it at the weekend as well, and look, it's very, very new, just 1 week ago. So last week, Monday, they announced here the BNN Bloomberg terminal, so something, let's say, valid and serious when we talk about source of news. Nubank XP to join key Brazil index in boon for US listed shares, yeah? And I make it a little bit larger, and you can see here a few companies which are located in Brazil, yeah? And I mean, I'm a shareholder of Nu, I'm a shareholder of StoneCo, and StoneCo direct competitor PagSeguro actually as well, and new direct competitor Interco as well. But however, most important information is they will be added to the MSCI Brazil index. I mean, those are hot news from my perspective. They mentioned, where is it? Here. That is basically the core information, the core news about this, which is for me definitely something worth, and which explains maybe not because just of the good results of Nu and StoneCo, the good Q2 2024 earnings results, but as well why the stock price rises quite strongly. You can see this will result maybe out that 5 billion of inflows will happen in those 4 or 5 companies. And I mean, okay, Nu is a larger company, but compare it to StoneCo. StoneCo has an EV of roughly 5 billion US dollars, just 5 billion. And if they just get 500 million out of this 5 billion potential inflow, it's 10% up, let's say it like this, yeah? I mean, as soon as they are in the bucket of the MSCI Brazilian index, all of these funds, these private investors who are not investing in single stocks like we are doing it, but they're setting a higher focus on ETFs, they will automatically invest into the future as long as they have, let's say, ACWI, IMI product, so which is cover the whole globe, or which covers the Brazil, Latin American market, emerging markets. They will start to invest automatically money into Nu and StoneCo. So first of all, this will have a positive impact on the demand of the stock. Will very likely have positive impact on the price, so it will raise. At least it's not unlikely. And on the other hand, it's the stocks StoneCo and Nu getting just more popular under the investors. So for me, very, very hot, very, very strong and interesting news. And guys, one more time, so if you like this kind of news, make sure that you're not missing the second stock news episode, which will take place on upcoming Thursday, so roughly in 3 days. Yes, guys, I want to big thank you for joining the stream today. If you like what you have seen here in the past minutes, make sure that you like the stream, that you like the video. I would highly appreciate this. If you are not a follower or a subscriber right now, make sure you follow me on YouTube, on X, on Instagram, and of course on Reddit. Yeah, I always share there if I purchase new stocks. In the future, maybe I will share as well on time the news like I've shared with you on the screen a moment ago. So it can really add value to you, I guess. And however, very thankful that 2 of you are still here live and have joined the session and still active. Highly appreciate. Guys, I wish you all the best. As always, make sure to do your own due diligence research process and making sure that you spend your money very wise. At the end, it's your money and you can't blame anyone else as well, not me, for your decisions, let's say it like this. Just use this as an entertainment and maybe an orientation, but not as a fundament for everything. However, I hope I could add value to you somehow. I hope you had a good time. I hope you will stay healthy and take care of yourself. That's the most important from my perspective. And I see you maybe tomorrow when we talk about Grab, the earnings roundup. On Wednesday when we talk about Elfen earnings live stream. And last but not least, on Thursday when we talk about stock news, about StoneCo, Nu, Grab, Sentinel-1, Hims and Hers, and Elfen. Okay guys, let's go. See you next time. Cheers, all the best. Bye bye. A sense of capital.